Good morning and TGIF traders. It's Friday. Today is Friday, July 31, 2020, the last day of July. Wake up tomorrow. Boy, we're already into August. Okay, I've got four charts up here that you can see. Google, Facebook, Amazon, and Apple. Overall, excellent earnings. Google is the weakest, but it's certainly not falling apart, so we'll take it. Facebook here, let's do this. Facebook, yesterday's close, we're going to be opening up somewhere near 250. On Amazon, here's yesterday's close after earnings. Looks like we're going to open up around 32.30. Is that right? Yeah, 32.30. And then on Apple, yesterday's close, looks like we're going to open up about 411. And the exciting news on Apple, we're getting a 4-to-1 split. What is it, the 24th of August? So for those that have been wanting to trade Apple, you can't seem to trade it because it's too expensive. It's going to be somewhere around $100, and maybe that's more enticing for you. So we're going to keep an eye on that. Boy, I sure am. That might be a pretty nice trading stock that we can get into if you've not been able to get into $400 trade, whether it's a stock or the option, still expensive. All right, so let's go to this chart. There we are. Today we're going to look at my chart with my 200-day simple moving average. That's this big red line right here. We're also going to be looking at, this is my rounded bottom breakout chart is what it is. And we're going to be looking at the dotted deuce. This is the dotted deuce I have right here. And it is simply, for those that don't know what that is, it is right here. It is simply the 200 period moving average. It is front weighted versus simple exponent or exponential. And it's also the average of the low versus the last price, which that's normally what people put it on. But I have it marked on the low. And we call that the dotted deuce. The blue line up here, this is the 50-day simple moving average. And the black line right here, that's the T line. That's the 8 exponential moving average. And the green and red dots, that's my trend indicator, which you all know that I just use the 17 EMA as my trend indicator. And I think everybody knows that you can change that if you want. If you want to use the 30 simple moving average, you can do that as well. And I have a short video. If you look back a few videos, I have a short one on how to set that up on TC2000. Alrighty, let's take a look at some charts here. Let's look at VXX first, VXX. So VXX, you can see we're flirting with the 200 period moving average here. Yesterday, it got just a little bit excited, popped up some. We ran right in to the trend indicator and the dotted deuce here, ran right into it and just slammed it right back down. It looks like we're going to open up around 28.70 with the positive earnings of the four biggies there. The fear or volatility has just been wrung out of the market for now. Again, I say for now, it's been out. So I'm just talking from yesterday's high. So from yesterday's high, it just really wrung back out. And now we're looking at these lows again, sitting on the 200-day simple moving average. That is something we ought to keep our eye on. And of course, if it starts moving up, I will alert everybody in the trading room. Okay, now let's take a look at some charts. Let me bring this up. There we go. First one I have, doesn't mean it's the best, just means the first one on the list, is CWH. CWH. You can see the very nice trend it's in. The 50-day is over the 200. The 50's rising. The trend indicator is looking good. And now we have a slight little pullback here. Slight little pullback in the chart with a little bullish Hiromi, actually a bullish piercing candle yesterday. So now what we're looking for is a breakout, or rather just follow through off today's candle, yesterday's candle, follow through off yesterday's candle. And one of the targets I have above here is about 43 bucks or 15 and a half away up here. And that might make a nice little swing trade, and then we will evaluate price going up higher on this. LOGI, L-O-G-I, Logitech. Another one that's trending. The 50-day simple is up. Dotted deuce, 200 simple. That's all trading to the upside. Nice little pullback. You know, when you have a trending chart and then you have a pullback, that is set up for what we call a PBO, pullback opportunity. As long as that trend stays intact, and even if it comes below the trend, but then it comes back above the trend, that is considered a PBO as well. So we look for these PBO setups, pullback opportunities. LOGI is one of them. We've got Doji right in here making a beautiful morning star chart pattern right here. And now we yesterday closed over 72.10 here, which happens to be the first candle of that morning star. And I think that is some good confirmation. That's the kind of confirmation I'm looking for when I see a morning star to close over that first candle that makes up the morning star. 78.60 up here, possible target. So now we're looking at about 7, maybe 8% on this swing, with a possibility of moving higher on a breakout. Fastenal, I think that's been on our list a couple of times this week. Fastenal acted really good yesterday. You can see that we had this rally and here this pullback, and now we've broken out of that little pullback, little flag right here. We've pulled out of that, creating a little bullish J-Hook or continuation pattern here on fast. You can see that the trend indicator's green and moving up, the 50s moving up, the deuces, both of them are moving up here, and again looking for about 49 on that fast. Another chart that may do very well with the earnings from last night is XLK. Looks like XLK is going to open up a little bit high here, 109 in the 109.30 area. That's perfectly fine. What I'm going to do is look for basically a buy signal in this area, and the buy signal will simply be, say we open up, so I start to see some consolidation, maybe intraday, then I'll look for that buy setup. And what I'm always looking for is that rally, that pullback, that PBO, and then we'll look for follow through, and that's where we're making our money right here. So intraday, we're already up. What I'm going to do is look for that little pullback here, and the scanner, I'll be using the scanner on intraday time frame, maybe something like the stop V-stop trap intraday would bring up chart patterns like this right here. So I may turn that into an intraday, or build another one real quick and give it an intraday. So I can watch for those intraday buys, like on charts like XLK. Target 115.75. That's not looking too shabby there. Okay, so what do we have? There we go. You can see here we've rallied up. We've pulled back. We rallied up. Little trouble right up in this area. We pulled back. Another one of those little morning star signals. We went flat right here. Nice little consolidation. The good news last night is popping us up, and it looks like it's taking us above all this congestion this congestion around this 109.30 area. So from there up, we should see some pretty good trading, providing the tech continues to work. Tech has got to work. Double A here, AA. AA is one of our rounded bottom type trades. It's not exactly a rounded bottom breakout because there's just not enough room between price and the 200. We generally look for 10%. So it doesn't meet 100% of the rounded bottom breakout criteria, but it is between the 50 and the 200, and that is one of the pieces to this strategy. I also think if it starts to move here, we could get to 1440 and possibly 1580 on a breakout of that 200-day simple moving average. So that's why I'm looking at this. You can see the trend indicator moving up, 50-day simple moving up. Price is moving up and just simply consolidating here. The last 4 bars have really put in a nice little price action pattern, kind of that pop out of the box that we like to see. Pop out of the box would be these candles right in there. When you start to see them move up, out, or if you are an inside the box buyer, that sets it up for very nice risk reward. On the risk side, if it starts falling below those lows, you know to get out. And if the entry was, say, 13.18, you're looking at, I would probably set this up on somewhere between 4 and 4.5% loss, with a target, a first target up around 9.5, second target up here around 20.5% on the reward. So AA, Alcoa, I think has a nice risk reward. Crowd, CRWD, with a target of 128.20. Let me get my crayon here. You can see we've rallied up, and now we're putting in, let me draw that a little bit lower. You can see we're putting in a bottom. You can also see the high to a low, to a higher high, to a higher low, or double bottom. They're both the same in my book. And now we've broken out of that middle high, and that is a bullish double W pattern that we've broken out of. Nice little pop yesterday. We're up 1, 2, 3, 4 bars. I don't think day before yesterday. Let's see, day before yesterday. I don't think that was a buy. But yesterday, that could have been a buy because it's a little bit lower. It's an inside day. Looks like we're opening up a little bit higher. So on follow through over these 2 candles, that may be a buy. Those that got into it yesterday, good job. That's terrific. Abbott is looking really good here. Abbott has already taken out our first target that we had off this little PBO here, pullback opportunity. It's taken out that first target. Now we're looking at 104.50, 104.60, up into the 106.25 range here on Abbott. KRE, some regional banking. This is setting up as a rounded bottom breakout. We've closed over the 50-day simple moving average. First target is going to be around the dotted deuce here. Second target, we're actually going to pull back here a little bit. I'm going to put that second target in about 42.10, and then we'll just run right up to the deuce, the 200 simple. So there's 3 targets ahead of you for KRE. Nice little trend here up, and now we're pulling back. Broke out of that 50-day simple, pull back, testing the 50-day simple. The trend indicator is also green. You can see that through there. And then we're looking for price over the next several days to reach up to 40.30, consolidate probably, 42.10, consolidate probably, and then on up to 45.75. One more, COF, COF. COF is another one of these rounded bottom breakouts where we're down, we're moving up, We've got a low, high, higher low, higher high, and the higher high is actually building a pop out of the box setup with targets around 69.90, 78.80. Let's adjust that. Let's put that one down here, and then we'll just go right to the 200 up there. I'm going to be looking for some buying inside the box. I will also look for buying on a breakout if I miss inside that box right there. Alrighty. As always, whoops, FNGU, I think we need to watch this chart. I think this is one of the most important charts right now because big tech is leading, and this is the FANG ETF, and I watch this an awful lot. I see it's gapping up, so it's putting the bulls in great shape now, excellent shape, despite the diamonds being down yesterday, not really showing anything great, and even they're still opening up below the trend indicator and below the T-line. So the diamonds, the Dow is a big drag now. Big tech, NASDAQ, Qs, rocking and rolling. All right, everyone, have a wonderful weekend. I'll try to get a video out this weekend on maybe a few charts that you might get ahead of the game on, and then we'll see you Monday morning. Everybody take care.